During his first term, President Donald Trump introduced a series of tariffs on China, aiming to correct trade imbalances and safeguard U.S. industries. These tariffs targeted a broad range of Chinese goods, sparking a trade conflict between the two nations. The goal was to pressure China into altering its trade policies, particularly in areas like intellectual property and technology transfers. Now, in his current term, Trump has proposed a 10% tariff on Chinese imports as part of his America First trade policy. This directive instructs federal agencies to prioritize U.S. economic interests, with the tariffs serving as a tool to cut trade deficits and promote domestic manufacturing. According to the administration, these measures are essential to counteract unfair trade practices and protect national security. Additionally, the U.S. has imposed export restrictions to limit China's access to advanced semiconductor technology, including manufacturing equipment and specialized software. The objective is to slow China's progress in artificial intelligence and other high-tech fields, as policymakers worry that China's advancements could pose economic and security threats. In response to these restrictions, China has taken a surprising approach. Rather than imposing counter-tariffs, it has focused on technological innovation. Recently, China unveiled a groundbreaking AI development that has sent shockwaves through global financial markets. This new technology has positioned China as a strong competitor in the high-tech sector, directly challenging U.S. dominance. The announcement had an immediate impact, causing stock values of major U.S. tech companies like OpenAI, Nvidia, Google, and Meta to drop significantly. President Trump reacted by calling China's AI breakthrough a wake-up call for American tech firms, emphasizing the need for more innovation to stay competitive. Despite the massive market disruption, including a $1 trillion loss in the U.S. tech index and Nvidia alone losing $600 billion in market value, Trump noted that China's cost-effective AI development model might offer useful lessons for U.S. companies. He suggested that achieving similar performance with fewer resources could lower costs and drive efficiency in American innovation. While details of China's AI advancements remain undisclosed, experts believe they represent a major leap in fields like generative AI, machine learning, or quantum computing. This development has intensified the race for technological supremacy between the U.S. and China, raising concerns about global AI competition. This video will break down the effects of these recent developments on the U.S. market, analyzing the reasons behind the sharp decline in stock values. We'll also explore DeepSeek, the Chinese AI breakthrough that has captured global attention, and examine why U.S. policies aimed at limiting China's technological progress have not had their intended effect. On January 27, 2025, U.S. financial markets experienced a historic downturn, largely triggered by DeepSeek's announcement of a cutting-edge AI model. This revelation raised concerns about America's position in the AI race and caused widespread anxiety within the tech industry. The Nasdaq Composite, which heavily features tech companies, saw a sharp 3.1% drop, its biggest single-day loss in over a month. The S&P 500 also fell by 1.5%, with the tech sector contributing most to its losses. Interestingly, the Dow Jones Industrial Average managed to rise by 0.7%, thanks to gains in healthcare and consumer stocks that helped offset tech declines. The biggest impact was felt by major tech firms. Nvidia, a leader in semiconductor and AI technologies, suffered a near 17% stock price drop, erasing around $465 billion in market capitalization, the largest single-day loss in U.S. stock market history. Microsoft and Alphabet, Google's parent company, also struggled, with both stocks falling by 4%. These declines reflected growing concerns about how American tech giants will respond to increasing competition from China. DeepSeek's AI model reportedly matches or even surpasses top U.S. AI models like OpenAI's. However, what sets DeepSeek apart is its cost-effective approach. Unlike U.S. companies that depend on high-end hardware like Nvidia's GPUs, DeepSeek achieved similar performance using more affordable, less advanced technology. This revelation raised doubts about the sustainability of high-cost AI development strategies in the U.S. Investors reacted with widespread sell-offs, signaling uncertainty about the long-term growth of American tech giants. What is DeepSeek? DeepSeek is a Chinese AI company founded in 2023 by Liang Wenfeng and Hong Zhu. Until now, it was relatively unknown, but its latest AI advancements have propelled it into the global spotlight. DeepSeek specializes in developing highly efficient AI models, and its latest innovation, R1, is making headlines for its impressive capabilities. R1 can process and generate human language with incredible accuracy, rivaling models like OpenAI's GPT. It also has advanced image and video recognition capabilities, making it valuable for applications like autonomous vehicles, security systems, and content moderation. What makes R1 even more groundbreaking is its cost efficiency. Unlike US tech giants, DeepSeek built R1 using lower-end hardware and domestic technology while still delivering high performance. DeepSeek's founder, Liang Wenfeng, has a strong background in engineering and previously co-founded an AI-driven investment company. Profits from that venture helped fund DeepSeek's creation. His vision is to make cutting-edge AI both accessible and affordable. In a bold move, DeepSeek made R1 completely open source, allowing anyone to use, modify, or build upon it for free. This contrasts sharply with US tech companies, which often keep their AI models private and proprietary. The release of R1 has shaken the tech industry and financial markets. Major US firms like Microsoft, Nvidia, and Meta lost over $1 trillion in combined market value following its debut, with Nvidia alone seeing a $600 billion drop. DeepSeek's success has intensified concerns that China is rapidly closing the AI gap, raising questions about the future of global technological leadership. However, DeepSeek's rise has not been without controversy. Some experts worry about possible government influence on the AI model, particularly regarding censorship and sensitive topics. Additionally, while R1's open-source nature encourages collaboration, it also raises concerns about potential misuse, including unethical applications. DeepSeek's rapid advancements have positioned it as a formidable AI competitor, proving that innovation isn't limited to companies with the biggest budgets. Whether this signals a long-term shift or a temporary disruption, one thing is certain: DeepSeek has captured the world's attention. Before we continue, if you're enjoying this video, consider hitting the like button. It helps us reach a wider audience, and we'd love to hear your thoughts in the comments. Thanks for watching. Let's dive into the impact that DeepSeek's success has had on global markets. The rise of this AI model has sent shockwaves through the tech industry, causing significant financial turbulence. Technology companies, particularly giants like Nvidia, have seen sharp declines in market value. Nvidia, which has long been a leader in supplying high-end chips for AI systems, lost over 17% of its stock price in a matter of days, amounting to a $600 billion loss. Other major players such as Microsoft, Meta, and Alphabet have similarly experienced stock price drops, leading investors to reconsider their dominance in the market amid the growing competition posed by DeepSeek. DeepSeek's breakthrough has forced a re-evaluation of the AI landscape. Investors are now questioning the sustainability of massive infrastructure spending by US tech companies when a smaller entity like DeepSeek can achieve similar results with fewer resources. This shift is clearly visible in global markets, which have seen ripple effects across technology sectors and related industries. The United States has long focused on containing China's rise in the tech world through strategies like sanctions, export controls, and building international alliances. However, the emergence of DeepSeek has exposed weaknesses in this approach. The US underestimated China's ability to innovate despite these restrictions. DeepSeek's success shows that Chinese researchers and engineers have managed to overcome technological barriers in several ways. For example, they've developed custom AI algorithms that reduce the reliance on high-end GPUs, a crucial component for advanced AI systems. By optimizing software for less powerful, locally available hardware, they've bypassed the dependence on Western technology. Additionally, China's investment in education and research has played a critical role in its technological advancement. The government has funded programs aimed at nurturing a new generation of AI experts, many of whom were educated abroad and have returned to China, bringing cutting-edge knowledge back with them. This reverse brain drain has fostered a culture of innovation that's proving resilient in the face of international sanctions. Despite U.S. export controls attempting to block China's access to advanced semiconductor manufacturing tools, such as extreme ultraviolet lithography machines, Chinese companies and researchers have found ways to circumvent these limitations. They've turned to older generation chips and developed software solutions that make these less advanced components capable of running sophisticated AI models. Moreover, the Chinese government's heavy support for the domestic semiconductor industry has allowed local firms to make significant progress in chip design and manufacturing, reducing reliance on foreign suppliers. DeepSeek's groundbreaking AI model serves as a testament to China's ability to innovate despite these restrictions. The model has reached a level of sophistication that rivals Western counterparts, undermining the premise of U.S. semiconductor restrictions. This raises questions about the long-term effectiveness of such strategies and calls for a more nuanced approach to managing global technological competition in an interconnected world. DeepSeek's success, achieved with just a modest $6.5 million investment, has disrupted the global technology market, erasing billions in value from major U.S. corporations like Nvidia, Microsoft, and Alphabet. This development underscores the ineffectiveness of U.S. policies designed to protect American industries from foreign competition. The U.S. has relied on tools like tariffs, export controls, and sanctions to stifle foreign technological growth, but the rise of DeepSeek demonstrates that innovation can flourish even under constrained conditions. By leveraging cost-effective solutions, creative engineering, and local resources, DeepSeek has managed to bypass U.S. barriers and challenge the dominance of established American firms. The downfall of U.S. tech companies in the face of this competition highlights the failure of these protectionist policies. Nvidia, for example, saw its stock price plunge by nearly 17%, erasing $465 billion in market capitalization, the largest single-day loss in U.S. stock market history. This unprecedented event shows investor skepticism regarding the long-term competitiveness of American tech companies in an increasingly globalized market. The flaw in U.S. policy lies in its outdated approach, which prioritizes protectionism over fostering innovation and collaboration. While the U.S. attempted to create an advantage for its industries by imposing tariffs and restricting access to advanced technology, this approach has had unintended consequences. It has forced foreign competitors, particularly China, to accelerate their self-reliance initiatives, pushing them to invest in domestic R&D and innovation. As a result, companies like DeepSeek have emerged, showing that it's possible to innovate even without access to the latest tools and resources. Furthermore, the U.S.'s reliance on tariffs and trade barriers has strained relationships with its allies and trading partners, isolating the U.S. economy in a rapidly interconnected world. The daily announcements of new tariffs and trade restrictions by the current administration reflect a reactive approach to global competition. While these policies may offer short-term political victories, they fail to address the deeper challenges faced by American businesses, such as the need for greater investment in education, research, and infrastructure. The rise of DeepSeek serves as a stark reminder that global competition cannot be managed through isolation and trade barriers alone. If the U.S. wants to maintain its long-term competitiveness, it must rethink its approach and embrace a more adaptive, inclusive strategy. By fostering innovation, collaboration, and global engagement, the U.S. can turn this disruption into an opportunity for growth and renewal. Thank you for watching. If this content resonated with you, please consider liking the video and subscribing to stay connected. Your support is greatly appreciated.